right. Well, welcome everybody to another monthly market update. I'm Jay Cottrell. This is Josh Pruitt, and we're just happy to be close to the holidays. Um, wouldn't you say, Josh?
Yes. Favorite time
Yeah,
of year.
absolutely. Well, we thought to kill some time here in the beginning while we're waiting on some people to log in, is we decided to challenge each other to a dad joke challenge. So, and I've got a little surprise here for Josh because
Uh-oh.
ta-da, we have a scoreboard.
That's
Uh,
hilarious.
yes. So basically, we'll just we'll do about five. We'll alternate, and whoever gets the other one to laugh scores a point. And but I will say, be careful. If you laugh at your own joke, then you score a point for the other person. So, um,
Yeah.
yes. So Josh, I will let you go first.
All right. Is there smiling involved?
Oh yes, that one. Smiles don't count, but bring it.
Okay. All right. These are all Christmas dad jokes, just so you know.
I didn't go that detailed, but
Okay. Why does Santa have three gardens?
why?
So he can ho ho ho.
All right. Well, I'll stick with the Christmas spirit. So, what kind of music do Santa's elves listen to while they work? Rap music.
Hmm. That's a good one.
Hmm.
All right. What nationality is Santa?
I don't know.
North Polish.
All right. That one got a little chuckle. uh, okay. So, I figured out why Teslas are so expensive. It's because they charge a lot.
Ah, clever.
Hmm. Hmm.
What happened to the man who stole an advent calendar?
I don't know what.
He got 25 days.
25 days. Got it. So, do you know why you shouldn't brush your teeth with your left hand? It's because a toothbrush is better.
Because a what is better?
A toothbrush is better.
Oh, you got me.
Gotcha.
I had to think on that one for a second.
Yeah, I didn't deliver that one all the way, all the greatest.
That's okay. So, what are the best Christmas sweaters made of?
I don't know what.
Fleece Navidad.
Mm, that's a good one. So, did you know that in Athens, no one wakes before noon? Yeah, because dawn is tough on Greece.
Uh, Not got me yet.
I know.
Straight face.
Yes, you are.
All
All right, here we go.
right.
A couple more.
What do you get if you eat Christmas decorations?
Glitter. I don't know what.
Tinselitis.
Mm, it's not a bad one.
Not bad. Not
So,
bad.
not bad. So, why is your nose in the middle of your face? Because it's the center. Nothing? Nada?
Almost.
Almost?
Almost. What did Adam say the day before Christmas?
I don't know what.
It's Christmas Eve.
Mm, that one, that one needed a little drum roll. All
Yes.
right, so I was walking down the street this morning and I first got hit by a violin, then a clarinet, and finally a piano. I think it was an orchestrated event.
Mm.
No, nothing. All right. Well, I think we can declare you the winner. All
Not by
right.
much.
No,
It's hard to it's hard to laugh at dad jokes.
it really is. They have to actually be decent to laugh at them instead of just get the old got it.
Yeah, I think that they got to be so bad that you laugh at how terrible they are.
True, true, true. All right. Well, what do you say we quit boring everybody and go ahead and get started? So, all right. So, again, everybody, welcome to this month's market update. It's where we kind of give you an update on where the mortgage market is, where the local real estate market is, and then try to give you some expert opinions, which are obviously not ours, on where things are probably going to be headed. So, let me see if I can get the slides going. There we go. First off, I wanted to thank you all for helping us out with the blanket and duffel drive for the Isaiah 117 house. Our goal was to get about 100 of each, and we well surpassed that. So we want to thank everybody that donated to that and donated to them. We had stuff come in as far as Arizona. So thanks to everyone for that. I know they really appreciated
Yes,
it, and the
thank
kids
you.
really appreciated it. We're going to continue to kind of be a resource for them. So as they need things, they're going to let us know so that we can let others know. And we'll continue to kind of be a drop point for them to get stuff to them. I know one of the things they needed when we dropped these off, and I think they're probably still in need of, was boys body wash. So they
Hmm.
had a ton of girls and kids stuff, but most boys probably don't want bubblegum body wash.
Right.
So if anybody is looking to fill a need, that would be one, and you could just let us know, and we'll be glad to get it from you and get it to them. So I'll go ahead and let Josh get started and telling us about what's going on in the mortgage market.
All right. I won't keep us long, but guys, one of the things that affects rates that if you don't know about, is the CPI. And with the CPI, it measures inflation. And so inflation goes hand in hand with what's going on with rates, right? What the Fed see, what they choose to do. And so just a little bit of info for you guys. Just if you see, inflation is always an important consideration for interest rates, right? So higher inflation means higher rates. All other things being equal, and 2022 has seen the biggest spike in decades to the highest inflation level since the 80s and the highest mortgage rates in at least 20 years. And this comes from Mortgage News Daily. And this was just updated yesterday, right? So we've seen some really high inflation. I know it's been hitting my pocketbook. I'm sure it's hit your pocketbook, your wallet. We've all felt just how bad inflation has been. Well, that's been a lot of the reasons why rates, what you've seen them doing the whole year of 2022, is because of inflation, right? So some good news, is that right now we're sitting better than what we have, towards the middle of the year when things were moving up towards and past 7%. But we do know that the Feds are going to rate or cause the rate hike to go up just a little bit, but it's not as bad as what we anticipated. The reality will likely be somewhere in between. The Fed will hike rates again tomorrow, which is today, right? So be paying attention to what's going on in the market today if you want to see kind of where rates are going to go. But by only about 0.50% instead of the recent norm of 0.75%. So the market already knows this. What it doesn't know is what sort of outlook the Fed will share for the rate hike and cut path going forward. This will be revealed at the same time as the rate hike announcement via the quarterly release of the Fed summary of economic projections. Then half an hour later, Fed Chair Powell holds a press conference that also has the power to influence the rate market substantially. So we're going to see that rate increase probably today, if not tomorrow. And then also kind of looking what the market's going to do moving forward going into 2023. So what I anticipate is that, this last little increase that we have going into 2023, I think we're going to see, rates still in the sixes. We might bump up to around 6.75. But I think we're going to hold there. And my hopes, because I'm not an expert, my hopes are that we're going to kind of see that rate hike and then see things start to go down from there. So we knew at some point in time that the rates are going to come down in 2023, but it all just depends on this inflation stuff, right? Inflation's got to come down. And so we got to see this gap shorten so we can get things back to normal. But I think we're going to see that coming in the first part of 2023. You see rates, this is as of yesterday, rates are around 6.28%. So you should see that go up to right around 6.75, 6.8, but still hanging out underneath that 7% rate mark. So we knew this rate hike was going to come, right? So we've anticipated it, but we should see things going downhill from that standpoint. And that's my hope, right? So that's just kind of a little bit of a mortgage market update for you on the rates, what we can kind of anticipate, we kind of see all that kind of stuff. So Jay, you want to chime in? You can.
Sure. Yeah. I added in this. It's from Lawrence Young. He's the chief economist of the National Association of Realtors. And he was kind of comparing the historical difference between the 10-year Treasury bond and the 30-year mortgage rate. Because we've talked about it before, they tend to follow each other. They're not exactly the same, but if one's going down, then the other tends to go down. If one goes up, the other tends to go up. So they kind of do tend to follow each other. And one of the things he said is a return to the normal spread between that rate and the mortgage rate would bring mortgage rates down to around 6% currently. And so what he's done is graph it. Said the average spread is about 1.7 points between the two, but right now that spread's closer to almost double that.
Yeah.
At almost 3%. So if it just went back to the normal spread, even with the Treasury bond at where it currently is, that would put rates closer to 5.5%. So he's just trying to say that there's a lot of room for rates to come down based on the kind of the historical numbers that people have seen. So
Right.
yeah, they might go up a little bit, they might go down a little bit, but there's room for them to come down even if nothing else changes, and that's kind of our hope. We can't predict, we can't say that's going to be a certainty, but I think that's a lot of people's hope and a lot of buyers' hope right now.
Right.
And there
Well,
are
as long
still
as we can see
yeah.
inflation coming down, that's going to be a major positive factor. I mean, I think it was only down like 0.1%, I think is what they said,
Yeah.
and it's still down, right? So 0.1% is better than 0.1% positive,
It's not
because we keep
continuing
going
to go. It's
positive.
not continuing to go up. It's still not a great number,
Right.
but it's no the ascent has been stopped.
Right.
And so there are still opportunities for buyers right now. We are starting to see some sellers give credits to buyers for closing costs and other things, simply because there are fewer buyers out looking, which we'll get into later. And home prices have continued to appreciate. So there's a lot of equity that buyers have, and most have more than they expected. So they've been more than willing to give a little bit of that back to the buyer to help get the home sold. And then Josh, there's still buy downs and adjustable rate mortgages.
Yep. We still have lots of great programs out there to assist. And listen, the one thing you guys need to know is that companies have great programs in place, the buy down programs, ARMs, adjustable rate mortgages, seller credits or seller concessions, you name it. But on top of that, Fannie and Freddie the USDA, all these people are coming up with programs inside of their own programs, the government, to assist with things. So, they recognize that, what we're dealing with in the market, and that we have to keep things going. We have to keep, people still need to buy homes. Still people need to sell their homes. Listen, a lot of people sold their homes because of the equity that they had in their home, because of the, the prices of homes going up. We saw a lot of that last year, but there's still a lot of people who have to move because of changing jobs, right? Or they're going to move to a new area, or they were already planning on moving and it's already in place, or they can no longer rent the place that they're at, right? So people are still going to be buying homes regardless. And so, Fannie and Freddie and all those guys still have to adjust things to try to make things easier for people to purchase, right? So
Yes.
regardless of what the rates are, regardless of inflation, everybody's trying to work to make it easier for people to still purchase homes, even in today's market. And that's always going to be the case.
Hmm. Because the job market is still strong, so people are
Yes.
still moving because of jobs and on other things. So there's still just some natural factors that are in play of why people need to buy and sell homes currently. It's not like everything just went to a complete standstill.
Right.
um, so now let's get into kind of a little bit of the real estate market update. Um, and just like I said last time, don't trust the headlines, especially without the proper context. Um, so what I mean by that is homeowners still have a very high level of tappable home equity today. That provides a cushion to withstand potential price declines, but it's also preventing housing distress from turning into a foreclosure. So the result will likely be more of a foreclosure trickle than a tsunami. This is from Ksenia Potapov. I hope I said that right. She's an economist with First American. And what she's talking about is people have so much equity in their homes right now. The debt to equity ratios are so spread out that they're not having to foreclose if they're getting into a point where they can't make payments. They can refinance or they can sell to get out of that. And so we are seeing an uptick in foreclosures. Again, it's one of my pet peeves of relative statistics versus absolute statistics. So yes, relative to this time last year, they are up a high percentage point, but in terms of historical norms, they are still extremely low. And I'll show you that graph here in a second. But this puts into perspective the equity that people have in their homes, and this is a maximum 80% combined loan to value. So you can see, yes, this past quarter it went down substantially from the previous quarter, but it's still way up from 2021 and especially up from 2020 or 2019. So there's a lot more equity that people have in their homes nowadays, and the mortgage debt to income ratio is near historic lows as well. Um, and also, if you look at foreclosures, yep, they're up, but still look at that. All the way to the right is the current quarter in 2020, is the first three quarters of 2022. So yeah, there's significantly more than there were in 2021, but relative to history, and this goes all the way back to 2003, it's still a small fraction of what the normal foreclosure would market. And a lot of that is because of home equity. So if there's anybody out there looking to get a deal, waiting for foreclosures to come hit the market, you're going to be waiting a long time. They're not happening. And again, CoreLogic continues to say, and this is redoing this quote from last time because it's still true, that states in the Southeast are beneficiaries of the outmigration from more expensive states. So homes in more expensive states on the West Coast and the Northeast are likely to fuel home buying enthusiasm for properties in more affordable areas in the Southeast and in the Midwest. So we're still seeing that. We're still seeing people move from the higher price markets to the lower price markets, which is keeping our housing market fairly stable. Um, and so this is the 2023 housing market forecast. This is courtesy of Keeping Current Matters. They kind of get all this information together from the experts for us, and it's way easier than me trying to do it. So if you look at 2022, it was definitely defined by rising mortgage rates. So you can see, we went from the beginning of the year at around 3.2% to we're sitting, when they did this graph, it was 6.49. But we're at 6 point, what was that, 6.3 or 6.4? So a little bit lower. So that's what's been the change, the biggest change in the market this year. Total home sales are staying fairly level. So 2022 was less than 2021. Why was that? Well, it's because the interest rates continued to increase throughout the year. And, at one point in time, we're over double where we started the previous year. So that affected a lot of buyers' ability to purchase. You really affected was new home builders, because, when you're just buying a house, you're the time you sign the contract to the time you close is 30 to 60 days. So you've already locked in a rate for that mortgage. But when you're doing a construction loan, that rate changes throughout the process of getting that loan. Which when the rates went up, it priced people weren't able to afford the loan on that new construction anymore, so they had to cancel the contract and kind of hand things back over to the builder. But you can see what they're expecting for 2023 is slightly fewer home sales than this year. Now, the one thing that could change that is going to be mortgage rates. If mortgage rates drop back down closer to 5, I think you're going to see a ton of buyers flood the market. And you can see some people, NAR expected it to be about the same as 2023. Fannie Mae expects it to be much, much less than 2022. But the average of the four forecasters they used was 5.1 million home sales. Now, home price forecasts for 2023, because everybody's asked me continuously, when are prices coming down? When are prices coming down? And the unfortunate answer is they're not. But when you look at the forecasts from each entity, the average of all 7 is about 0.4%. But you can see that's only because 3 of them projected home price declines next year, whereas Realtor.com, where most realtors are pretty bullish on home prices next year, we think that they're still going to appreciate, though at a much slower pace, because this year they're sitting at about 20% higher than the previous year, so only appreciating 5% next year is definitely a deceleration, but it's not a negative. And I think a lot of it depends on where they get their data from, because if you're factoring a lot of the higher priced markets, then the numbers are going to look different than if you exclude those markets and look at some of the smaller markets. But anyways, so you can see that's what the experts are predicting. The average of them is about 0.4%. So at worst, you're looking at maybe flat home prices for the next year. So the upcoming months should see a return of buyers, as mortgage rates appear to have already peaked and have been coming down since mid-November. That's Lawrence Yun again. This is another quote from Mark Fleming. He's saying the housing market, once adjusted to the new normal of higher mortgage rates, will benefit from continued strong demographic driving demand relative to an overall long-run shortage of supply. So what he's talking about there is demographics. The baby, not the baby boomers, but the millennials and Gen Z are starting to reach the point where they're wanting to buy homes, and there is still a short supply of homes relative to historic norms, especially in new construction. So that continued pressure of supply versus demand will continue to keep the housing market relatively strong. And this is Doug Duncan, Senior VP and Chief Economist for Fannie Mae. He's saying from their perspective, the good news is that demographics remain favorable for housing, so the sector appears well positioned to help lead the economy out of what we expect to be a brief recession. So now let's talk about the local real estate. Before I do that, Josh, do you have any comments or things to add in from those kind of expert projections?
No, I think it's all good, and they're all projections, so
Yes.
anything can change.
Well,
anything could change the market at any point, you know, and
exactly, because
um,
we saw it this year. We saw at the beginning of the year, it was, the hellfire and brimstone type thing of real estate. Oh, home prices are going to slide. People are going to quit buying. And the first 2 quarters, they didn't. They would continue to increase and go up. And everybody was,
right.
said, oh, we're only going to have 2 or 3% home price appreciation in 2022. And we've almost got 10 times that. So they were wrong at the beginning of last year, which means they could be wrong this year too. Because this is honestly a market where it's hard to predict. All the
Yeah.
normal pushes and pulls on the market are all out of whack, and they're trying the best they can to give some sort of semblance of um, reality to calm people down a bit. But
Yeah,
things can
absolutely.
change pretty quickly. So if we look at the local numbers, this was the numbers for the month of November. There were 673 new listings in November. There were 1,383 active listings during the month, so that's homes for sale. There were 693 sales. The median sales price was still strong at 225,000, while the median sales price year to date is 230,000. So far year to date, it's 200. So November was a little bit lower than the year to date numbers. The median days on market is at 49 days. So that means half of the homes are selling in less than 50 days, and the other half are taking longer. And that's a little bit longer than we were seeing, because you got to remember 30 days is the typical turnaround time on a mortgage and the typical contract time on a house. So that means most homes were going under contract within 19 to 20 days of hitting the market. Now, if you compare those numbers to 2021, and then compare the what it looks like year to date from 2021, I'm gonna have to look off to my side because I cannot read those small numbers on my little screen here. So those new listings of 673, that's down almost 8% from 2021, and it's down 7% from 2021 year to date numbers. The number of active listings is up significantly, almost 13% over November of last year. However, the year to date aggregate number is still down from the previous year. So you can see it's down 8%. The number of sold listings at 593 is significantly down from November of last year, almost 27.5% fewer homes sold during this November than last November. And year to date, it's trending down as well, almost 10% down, which means the inventory levels have been increasing. That's at 1.78 months, so almost 2 months of inventory, where there were times last year we were down to 2 weeks of inventory. So that's up significantly at 21% from the previous November. However, year to date, it's still down a little bit at 5%. So we started to see things slow down the end of last year and the inventory climb, and we haven't seen quite that steep of a decline this year, mostly because the number of sold is so far down from the previous year. But that median sales price, that 225,000 year to date, that's up 16.75% from 2021. So we have definitely seen a continued increase in home price appreciation this year, and it doesn't look like it's going to change much other than simply slow down. But this was something I looked at this morning, and I added in here last minute because I wanted to share, because a lot of people, there's a lot of listings on the market that just are not getting much people looking, and you're starting to see some sellers and realtors panic and quickly reduce the price of those homes. Well, one, we're in a holiday season, so there's always a
Hmm.
lower amount of buyers looking during this time of the year anyway. But what we've seen is a marked decrease in the number of buyers out looking for homes. Now, I really wish I could compare this back to like 2019 or 2018, but showing time only lets me go back 2 to 3 years. So I can't really go back that far to see how this compares to prior to the pandemic craziness that sent the housing market into such turmoil. So if you look at it, we started out this year with 72% more showings than we did in 2021. And that started to so we were way up at the beginning of the year, but you can see, look at how far that turned. So far this December, obviously we're only halfway through the month, but showings are down 33%. So there's 33%. You can look at it almost this way: there's 33% fewer buyers out looking for homes right now than there were December of 2021. And you can see that kind of started in November. So November, there were 13% fewer showings than November of 2021. Whereas up until that point, we actually had more showings prior than in 2021. But that's easy to start pegging. Josh, what started happening around the end of summer?
We saw a big spike in inflation.
And we saw the mortgage rates
Yep,
spike up
through
to
the
almost
roof.
seven. I think they were over 7%. Um,
Yep.
so obviously that's why a lot of buyers went peace out. Um, the real indicator is going to be what the first quarter of 2023 looks like. Will the buyers return to the market at even just a flat number, same amount as the previous year, a slight increase or just a slight decrease? Obviously, if we see major increases, that's going to be um, a different story. But again, to put this in perspective, this is 2019 to 2022. The number of active listings is trending a little bit higher than last year, but still down from 2020 and still way down from 2019, 2022. And all these lines, the current year is the red. It's going to be the red line. Number of sold listings is also down. It's closer to 2019 levels. We've been trending along 2019 levels up until now, but now we've actually gone down below that. But obviously, way fewer sales than the craziness of 2021 and 2020. The average sales price, again, is still up. You can see there's almost a 50% increase from 2019 to 2022. So that's a huge increase in home values for people, and that's why they have so much equity. Because especially if they purchased the house in 2019 or 2020, they're sitting on a ton of market equity.
Hmm.
When you look at that home price appreciation, the median sales price compared to the previous year of every month this year, you can see November, it's still up 7.1% over the previous November. So it's no longer in the double digits. We're down into the single digits. And I kind of expect that to carry on for the next several months. Again, it's going to really depend on what the inflation numbers look like. But I imagine probably single digit increases for the next at least 3 to 6 months. And that's kind of in line with what the experts are much predicting. But you can see how our local market, you really can't go by the national headlines, because if you take away some of the bigger markets out of the U.S. numbers, the smaller markets like us look very different. It's really a tale of two cities, so to speak. The big cities, the big markets, the expensive coastal areas, like the New Yorks, the Californias, the Oregons, they're seeing major declines, but everybody's moving from those areas to more of the central areas and the southern areas of the country. So we're not seeing those declines. We're still seeing increases. We're still seeing inventory shortages. So, um, oh wow, we even with the jokes, we might get this done in 30 minutes today and get everybody enjoy the rest of their lunch. Um,
Yeah.
so, bottom line, inventories are still low, but they're improving. Home price appreciation is slowing. The seller's market will persist for the foreseeable future. However, there are fewer buyers searching for homes than last year, and buyers have more options of both homes and mortgage programs. And mortgage rates are expected to decline slightly, but I added that because it really just seems like they're probably just moving more towards historic norms. Is that how you would characterize it, Josh?
Yeah, I would say declining towards normal,
Yeah,
right? So I think we should see, this year popping in the fives, hopefully.
yeah,
Um, but somewhere in the 5% range, we get down in the fours, that'd be amazing.
yeah.
But four to fives,
I think low
it's right there.
fives. I mean, I just think low fives. To me, low fives would be amazing.
Yeah,
I think,
5.25, 5.5.
yeah, I think you would see buyers coming off the tables and out of the woodwork to reignite their home search.
Yeah.
Because that would be almost a 2% drop from this summer, late summer.
Right.
Well, that's all I got. Let me look through the comments real quick. Oh, we just got some thumb likes and some go ons, and let me check the other feed. Um, that's about it. Just some thumb likes and stuff. So no questions, which I really appreciate. If we do have a couple of viewers that are still live. If you do have a question, just type it in real quickly, and we'll be sure to answer it for you. And if not, then just contact either one of us outside of this, and we'll be glad to get your questions answered for you.
Absolutely.
All right. Doesn't show me that anybody's typing. So, Josh, I'll let you close it out. Any final comments?
Guys, we appreciate you jumping on. If you check out this video at any point in time, keep your heads up. The market's going to shift for the positive at some point. I think we already can kind of see that happening. We've been trending towards 2019 levels, and that's a normal. So normalcy is what we need, and if things pick back up, I think we might shift somewhere between a 2019 and a 2020 middle ground, if things go where we want them to, which is slightly more positive than a norm, but either way, rates are going to come down. Inflation's going to come down at some point, so home prices are going to stay up regardless, even if they come down a little bit, which is a positive, and people are going to be moving this market probably for a long time.
I do, because I
So,
think the thing people don't realize when they're asking when our home price is going to come down is I don't know that you really want them to, because the last time that happened, it crashed the entire economy.
right,
Back in 2008 when we saw home prices dropping by the double digits, I mean that pretty much hurt everybody. That was way more painful than hopefully a more moderate price increase over the next year. Now,
right.
the rapid increase that we saw was almost as painful as the rapid decrease. But I think for things to get kind of a back to post COVID back to normal, people talk about, like you said, going back to 2019, that was still a pretty good year. We were
Hmm.
still, that was still seller's market territory. We haven't been in
Right.
our local market in a buyer's market since 2016 ish.
Yeah.
Um, so everyone, we really appreciate your time. We appreciate you, whether you're tuning in now live or you check these videos out later. Again, we would appreciate if you or anyone you know of is looking to buy a home, needs a mortgage, or needs a real estate agent to help buy or sell a home or help find investment property. We would love to kind of be the first person that you recommend to them, so that we can meet with them and see if we're really a good fit for helping them out. We're
We
going to go
greatly
ahead and let
appreciate it.
Absolutely. Well, again, thanks everyone. We're going to go ahead and close this out, and everyone enjoy the rest of your week. And since we won't see you until January, I'm going to go ahead and tell you Merry Christmas and Happy New Year. Enjoy your time with your family.